Hi, how are you feeling today?
I'm good, thanks.
I've been thinking about what you were saying, about how the banking system works. If what you told me is true, then there is no hope for the government, or the people, ever getting out of debt. And when the banks create money for loans, but not the interest, the economy must grow indefinitely, so that the system doesn't collapse.
That is correct. Unless we change the rules of the financial system,
How can we change the rules of the financial system?
we change the banking regulations.
What exactly would we need to change?
The change that I like best, and the simplest one to implement, in my opinion, is called 100% reserve banking.
What is 100% reserve banking?
100% reserve banking means that banks can no longer create money and can no longer lend money that they don't have.
What does that mean?
I first need to tell you about the current system, which is called fractional reserve banking. Fractional reserve banking means that the banks need to only keep a fraction of their deposits in reserve.
What does that mean?
It means that if everybody tried to withdraw their money at the same time, the bank would not be able to give them their money, because the bank only has a fraction of the money. A run on the bank happens when everybody tries to withdraw their money.
What happens when there is a run on the bank?
The central bank, or the government, steps in to save the bank.
How?
The government usually guarantees deposits up to a certain limit, which means that if the bank doesn't have the money, then the government will pay it. Or the central bank will provide emergency funding to the bank. Or the government gives more money to the bank.
But why does the bank only keep a fraction of its deposits in reserve?
Because of the way the money system works. Banks can create new money out of nowhere and only need to keep a fraction of their depositors' funds available for withdrawals. If too many loans default, the banks lose the money they created and become insolvent or bankrupt.
And what happens when the banks become insolvent?
The government gives them money.
You mean that the government gives them money, so they will be able to pay their depositors?
Yes. The government also gives them money so the banks will be able to make new loans or create new money. Because the economy is totally dependent on banks creating money through making loans.
Every time you tell me more about the banks, I get more angry. So what is 100% reserve banking?
In 100% reserve banking, the central bank, rather than the private banks, controls the money supply. Banks can no longer create new money out of nowhere. Banks can only lend money that they actually have. Most people think that banks take in deposits and loan these deposits to other people. That is not what banks do today, but this is exactly what 100% reserve banking proposes. In 100% reserve banking, banks are only allowed to lend money from deposits in savings or investment accounts. They are not allowed to lend money from current accounts.
Why wouldn't banks be allowed to lend money from current accounts?
Because nearly everybody needs current accounts to pay regular bills and to get money from ATM machines. People use current accounts as a service, not for investment. With separation of savings and current accounts, there is absolutely no risk to current accounts. So even if a bank became insolvent through making bad loans, the money in the current accounts would be safe.
How would the money be safe?
If the bank went out of business, the current account could automatically be transferred to another bank with no impact on the customer. And the government wouldn't have to bail out the bank.
But what about the people who had saving or investment accounts?
In certain circumstances, they would lose their money. But that's what happens when investments go bad, people lose their money. But this would be a rare event, and many measures can be put in place to protect savers and investors.
What measures?
There could be regulations about the risk level associated with different kinds of savings products. There could be different grades of savings and investment products. For example, a bank could offer an extremely low-risk account with a low interest rate. They could offer an account with increased risk and a higher interest rate. And the bank could offer higher risk products, providing even higher interest rate. This is similar to many investment products on the market today.
Okay, that sounds reasonable. So current accounts would be 100% safe, with no risk to the depositor, no risk to the central bank, and no risk to the government. Are you sure?
Yes. The system is designed so that the money in current accounts is stored in the central bank. With the computer systems we have today, this would be simple. And it would look exactly the same to the customer as today's current accounts.
But what about creating money? You said that the central bank, rather than the private banks, would create the new money we need? How?
They just create it by typing numbers onto a computer screen, just like the banks today create money by typing numbers onto a computer screen. Except that the central bank will give it to the government at no interest or at extremely low interest.
They just give it to the government.
Yes.
But how does that work? Would it not cause inflation if the central bank created money and gave it to the government?
No. No more inflation than the current system. In fact, probably less.
I don't understand.
Right now, the central bank decides how much money it would like in the economy. It cannot control this amount. It tries to influence how much money the banks create through indirect mechanisms, like setting interest rates. But with 100% reserve banking, the central bank has direct control over the amount of money in the economy. And in the current system, when banks create too much money, this leads to inflation. Just look at what happened to the price of houses and property during the bubble.
But could they just give the new money to the government?
Yes. And the government would decide how to spend it. The government would have no influence over how much money is in the economy. Just like today, the central bank is independent and decides how much money they would like in the economy.
This sounds too good to be true.
Yes. But it is very feasible, and the changes required to the system are simple to implement.
But what about loans? People and business will still need loans to buy new things. Where will they get these loans?
From the banks. They will borrow money from the banks, just like now, except that the money they borrow will come from existing savings and deposits, not from the banks creating new money.
I need to think about what you told me. This is the first conversation we have had where I don't feel tired, or ill, or angry.